everyone, welcome back to the channel. I'm Paula and here we talk about what's really happening in the world of crypto and finance. No hype, no panic, just clarity. And if you're new here, make sure you subscribe. I post deep dives every week that help you understand what's going on behind the charts. Now, let's talk about what just happened, because this week Bitcoin fell below 100k. More than $1.3 billion was liquidated across the market. And the confidence that carried crypto all year suddenly cracked. And it's not just technicals. This time politics, global risk and investor emotion all collided. So let's unpack it. First, the timeline. Bitcoin started the week trading above 106k, then slid slowly to around 102k before collapsing below 100k, triggering a cascade of liquidations across the board. Ethereum dropped towards 4.8k, Solana gave back a week of gains, and even stablecoins briefly depegged on some exchanges as traders rushed for exits. More than $1.3 billion in leveraged positions were wiped out within 24 hours. That's the biggest liquidation event since early 2024. But this wasn't a random crash. It started with a shift in global sentiment, what analysts call a risk-off rotation. For months, markets have been living on optimism, rate cut hopes, EFT inflows, institutional adoption. But optimism is fragile. It only takes one spark to flip to fear. That spark came from two directions: the Federal Reserve's latest tone on interest rates and the new geopolitical tension following high-profile comments from US leaders. Let's start with that second part, the political shock. In the last week, several major US political figures, including President Donald Trump, made sharp comments about foreign policy, specifically mentioning Nigeria and US military strategy. Those remarks hit international headlines immediately. Within hours, the Nigerian naira weakened sharply, bond yields in emerging markets climbed, and traders worldwide rushed towards the US dollar and treasuries. Why does that matter for Bitcoin? Because whenever global tension rises, investors move away from speculative assets, especially ones seen as volatile or unregulated. Crypto is the first thing to go when the world turns cautious. Even though Bitcoin is sometimes called digital gold, the reality is when fear spikes, people sell what's liquid, and Bitcoin is very liquid. So this political rhetoric triggered a chain reaction. Currencies dipped, risk appetite fell, and crypto prices rolled over. It's not about politics itself, it's about perception. Markets interpret strong language as uncertainty, and uncertainty always prices in as volatility. Add to that some frustration around US monetary policy, and suddenly every trader's risk model looks shakier overnight. Now let's zoom out to the bigger economic picture. For most of 2025, investors have been betting that the Federal Reserve would start cutting rates aggressively to support growth after inflation cooled. But in the last FOMC statement, the Fed signaled that cuts might be slower and shallower than expected. That instantly changed global risk pricing. Bond yields pushed higher, the dollar strengthened, and risk assets, tech stocks, commodities, crypto all wobbled. Remember, crypto has become more correlated with traditional markets than ever. When the Nasdaq sneezes, Bitcoin catches a cold. So when investors saw that the cost of money might stay high for longer, they pulled back from leveraged bets. And crypto, full of leverage, felt the sting first. Combine that with political noise and confidence cracked across every major market. Once fear hit, the technicals took over. Bitcoin's 100k level wasn't just a round number. It was a psychological line of support. Below that, millions in stop-loss orders and liquidation triggers were waiting. As soon as the price broke through, the dominoes fell fast. Funding rates turned negative. Longs were liquidated. Exchange liquidity dried up. And panic kicked in. On-chain data showed whales moving coins onto exchanges, but not necessarily to sell, but to be ready if the market kept sliding. Meanwhile, retail investors started panic selling stablecoins into cash, shrinking overall crypto liquidity nearly 2% in 48 hours. And all of this happened in a global environment where sentiment was already fragile. This is what we mean when we say the market needed a reset. Too much optimism, too little caution, then one external shock comes along and flips the entire mood. Every crash is psychological before it's financial. When prices rise, confidence rises faster. When they fall, fear snowballs. The crypto market is especially emotional because it's open 24/7. There's no cooling off period. Traders watch losses accumulate in real time, so panic becomes contagious. But there's another side to that. The same emotional cycles are what drive opportunity. Every major correction since Bitcoin's inception has ended with stronger hands entering the market. In 2017, Bitcoin dropped 40% before hitting new highs. In 2020, it fell nearly 50% during the pandemic crash, then began its biggest bull run ever. What's happening now fits the same pattern. A high confidence peak, a harsh correction, and eventually a reset of expectations. The smartest investors aren't trying to time the bottom. They're analyzing behavior because markets recover when fear peaks. So how does this moment fit into the bigger picture of 2025? Let's remember where we came from. This year has been dominated by three narratives: EFT adoption, regulatory progress, and global standardization. The US Bitcoin and Ethereum ETFs drew billions in inflows earlier this year, bringing institutional credibility to the space. But as inflows slowed, traders realized institutional money moves cautiously, not emotionally. Then came ISO 20022, the global messaging upgrade that's reshaping payments. Bank and fintechs have been adjusting systems all year. That shift adds transparency, but also exposes how interconnected the entire financial system now is. When macro fear rises, it spreads faster because everything is connected. And finally, there's regulation. Governments from the US to Japan to Hong Kong are rolling out new frameworks. That's progress, but in the short term, it also creates uncertainty. Projects, tokens, and exchanges all have to adapt. So while the fundamentals of crypto remain strong, the environment is noisy, and noise breeds volatility. So what comes next? Here are the key things I'm watching. Number one, Federal Reserve tone. The next meeting will be critical. Any hint of flexibility could calm markets fast. Number two, ETF flows. If we start seeing inflows again, it's a sign that institutions are buying the dip. Number three, stablecoin supply. Expanding supply means fresh capital entering the market. Shrinking supply means caution is still high. Number four, altcoin resilience. Watch which projects hold structure. Historically, coins that recover fastest after big corrections lead the next cycle. And number five, global headlines. Because lately it's not charts driving sentiments, it's microphones. One major speech or comment can shift risk perception instantly. That's the new normal for interconnected markets. Now let's take a step back. Nothing about this correction changes the long-term trajectory of crypto adoption. More banks are testing tokenization pilots. Governments are experimenting with blockchain settlements. Developers are building real-world applications faster than ever. So while prices fluctuate, the technology keeps maturing. If anything, these pullbacks clear out short-term speculation and give room for meaningful growth. We've seen this cycle before. Excitement, overextension, correction, consolidation, expansion. And right now, we're somewhere between correction and consolidation. That's where smart capital accumulates quietly while headlines scream crash. Let's look at precedent. In late 2013, Bitcoin lost 80% after its first major bull run. In 2018, the bear market lasted nearly a year before recovery. But every single time, the lows were higher than the previous ones. This market doesn't move linearly. It moves in waves, each larger than the last. Corrections are brutal because they reset optimism, but they also prepare the ground for sustainable growth. That's why veteran traders always say, bull markets are born in disbelief, grow in skepticism, and end in euphoria. We've just stepped out of the euphoric phase and now we're back in reality. That's not the end. It's the foundation for what's next. So, to wrap it all up, Bitcoin dropping below 100k wasn't caused by one headline or one policy. It was a result of multiple forces colliding. Macro uncertainty, political tension, and a leveraged market stretched too thin. Corrections like this feel dramatic, but they're how the system stays healthy. Fear shakes out excess, confidence rebuilds slowly, and new opportunities always follow. Crypto's story has never been about a straight line. It's about resilience. If this breakdown helped you make sense of what's happening, make sure you hit subscribe. I post every week to help you understand the why behind the moves. And if you want to go deeper, join me inside the Crypto Wolf Pack. It's a private community where we discuss these shifts in real time, share daily chart analysis, hold live streams, and have open conversations about where crypto's really heading. It's an awesome group, and it's where I found some of the smartest, most grounded discussions in this space. You'll find the link in the description below. Come join us, get involved, and keep learning. Thank you for watching, and I'll see you in the next one.